So we're going to discuss gold in this video, and we're going to start with the daily, and then we're going to get more granular and take a look at the intraday trades on gold. Gold is probably the market that I've received the most questions about today because of the way that we moved higher yesterday and even a little bit of today's lingering strength. So let's talk about where gold is on the daily. Gold is in a sideways market, but the sideways market was preceded by an uptrend. So in the spirit of respecting the trend that was, we focus mainly on oversold buys to get long, not overbought shorts to get short, or overbought resistance levels to get short. So that's the first thing, respect the trend that was. The second thing is remembering that gold, in terms of the election, I felt was an election honey badger, pretty White House agnostic. I think gold is going to head higher. Again, one of my ideas for 2021 is 2100 in gold for 2021. So I do have longer term expectations of movement. I'm not saying that's going to start with this move here, but I do believe that when we get more opportunities to take advantage of oversold levels in gold, and how would I measure those oversold levels in gold? I think the best way to do it would be with a ready aim fire or a slow stochastic to get that timing at the bottom of the range just right. The next thing we want to do is, now that we have that longer term bullishness, well, we're above some key levels. The rolling 10-day, which is dotted, and the anchor to the 1st of November, which is a solid white line. So those two white lines are volume weighted average price lines. And those volume weighted average price lines tell us that since the 3rd of November, really, we could really say since just November 2, this has been a long only market for day traders. Let's take a look at the intraday charts of gold. Now, gold is not a market that I'll use the clearing range strategy on, meaning the stock 30-minute opening range, clearing range. But a neat thing you can do on gold is just follow the wave and use the hourly price movement ranges. And also consider VWAP and V-score. So if I have the gold market heading lower, I'm not going to engage in the short. What I'm going to do is say, hey, keep heading lower. Give me an oversold level on the ready aim fire or a slow stochastic. Give me the lower end of the range on the V-score. Give me something that tells me we're heading down towards the floor. Notice the V-score here. I know there's a lot going on. Let me go over to this layout here. Yeah, okay. Let me just do this here real quick. Just so you can see the V-score by itself. So what you want to do is look for those lower end of the range opportunities on the V-score. And when we get down there, it's a 1 minute chart, we get down to the lower end of the V-score, take a look, down around a -2 standard deviation, that's going to be an opportunity to consider getting long. And then what I'll typically recommend is look for a reversal pattern. Use a wave 1, 2, 3 reversal. Those are things you can do on a 1 minute chart. Use opportunities to buy gold calls down around a -2, -2.5 on the V-score, but don't engage in the short, right? Look for that follow through to the upside. And that's what that directional bias will do for us, all right? So when folks ask me, do I think I'm going to see continued follow through to the upside on gold? A lot of it's going to be contingent on how I interpret what's happening on the 1 minute chart going into Sunday's open, going into Monday. But I am overall very bullish on gold.